All right, people, we should be live. Just give me a quick audio check that you can hear my voice and you can see my screen. I will kick off the stream very shortly. Apologies for the delay, had some slight technical issues there. Just waiting for the confirmation in the chat and we can kick off with the stream. Yeah, all good? Thank you. All right, fantastic. So as always, it's been a fascinating time in the week, a fascinating week, I should say, or a few weeks in the market. And we'll unpack everything that's happened over the last few weeks, what my thoughts are, where we are heading next, or where I believe we're heading next. And before we start, I'll also talk about the mentorship. There's been many questions around that, so we'll touch upon that before we kick off the stream. As always, a special thank you to all of you for tuning in once again. Special thank you to OK Exchange for partnering with me, where I'm a product partner. And anything said in today's video is not financial advice. I've got nothing to sell. So that's all there is to it, really. Okay. So before we proceed, let me just bring up some questions around the mentorship. So in terms of the mentorship, well, first of all, I just want to say I'm pleased, or I should say I'm relieved to have finally fired up the Substack. For those of you who haven't subscribed, it is free to join. It's free to read all the articles. I believe I've come to a point where in my own journey, you know, I've been in the markets for 9 years now, and I thought it would be a good time to really start writing content. It's kind of a consolidation of my own journey, what I've been through, where I am in my trading, and perhaps where I'd like to go next. But essentially unpacking everything that I've experienced and penning it down in a way that I hope to inspire or, you know, have a positive impact on others who are also looking to become aspiringly very good traders as well. So do go ahead and subscribe to that. It is free. There's going to be plenty of content coming out. So there's going to be all sorts of topics on there, from not just price action, but we're going to be talking about, you know, order flow, footprints, market profile. I'm going to be talking about, you know, articles that I've read and picked up over time and the adaptations that I've made to my own game. I've been, you know, for many of you out there, you probably assume that being technically proficient is key to becoming a successful trader. Now, I honestly thought that as well when I first started trading, but it's only until you later realize that you don't have to be the most knowledgeable when it comes to a technical perspective. You don't have to be the most gifted. There are people out there who are far more superior when it comes to understanding the nuances of price action, order flow. But what really matters is the psychological aspects, the mindset. The ultimate battle in trading is you against yourself. And it's something that I said that I've really started to pay attention to over the last two and a half years. And it certainly had a massive positive impact on my trading, such that I'm really excited now as to where I'm going to be in the next 3, 4, 5 years. You know, I set myself new challenges. I set myself ways in which I can improve, and I certainly don't believe I've achieved anywhere close to where I believe I can potentially achieve. So for me, it's a continuous journey. And in this game, having an ego or thinking that you're better than others or thinking that you know more than others, it's kind of the wrong way to approach trading. You have to be objective, you have to be open-minded, and you have to be willing, you know, have a willingness to learn. Now, even though the fact that I've been in this game for 9 years, every day, every week, every month, I'm picking up books, I'm reading articles, I'm watching videos, I'm picking up something new that enhances my own ability when it comes to the markets. And it's only through statistical journaling, record keeping is where I feel that I'm going to see those improvements. Okay, you know, you can make one trade, whether that trade works out well for you, whether that's one trade that doesn't go against you, is a level of randomness. But the ability to track the next 100 trades is what you should be thinking about, because then you have a systematic way or quantifiable way of understanding who you are as a trader, what are your probable edges, and how you will perform for the next 100 trades. Okay, so that's kind of the mindset as to where you really should be pushing or striving in that direction to improve as a trader yourself. Now, talking about the and I think that's what it is for me. It's just a way to really emphasize, and more for myself. And I thought it'd be quite interesting just to open up the Substack. It's just a way for me to really think about my trading, my journey, and where I'd like to go in the next 2, 3, 4, 5 years, and how I look to continuously evolve. So why not share that journey out there? If it means writing it down and sharing that journey for free, then great. If somebody learns from that, fantastic. So like I said, there's going to be plenty of publication of various articles for as long as I can keep pushing them out. Now, in terms of the actual mentorship, I understand that various users have had issues with onboarding. We are working through that backlog. Now, for those of you who filled in the Google form, thank you very much. There were many of you who had issues from a KYC perspective. So let me just address that first and foremost, that those of you who had issues with KYC or you had restrictions, there will be an option to join the mentorship via a paid route. Now, I just want to be clear that any proceeds via the paid route will all be donated to charity at the end of the mentorship, okay? And one thing that I would like to do is be transparent about that as well. So we will cover that towards the end of the mentorship, and maybe I'll pick out a few people to help me donate some of those proceeds to various charities. Now, yeah, okay, that's fine. So if you're, typical example, if you're in Canada, you can't KYC, like I said, there will be that option to subscribe via a paid option, which will be available tomorrow from 9 p.m. I will post an article on the Substack, so the instructions will be very clear. So I'm just finalizing that today, and that should be live tomorrow, okay? And for that reason, that's why the mentorship has been postponed until next week. It's just the fact that I wanted anybody and everybody who is interested to give them an opportunity not to miss out. So I wanted to just include everybody. It's all for a good cause at the end of the day, okay? Now, the paywall, like I said, will be live from Monday at 9 p.m. UTC. For those of you who signed up via the exchange referrals, just please make sure that you've done the basic requirements, which is a $500, I should say, deposit, and a $500 trading volume is required. If you haven't met the volume, you've got the next day or two to do that to ensure that you're going to be accepted into the group. So again, for those of you who've signed up via OK Exchange or Prime XBT, please ensure that you've deposited $500 and that you've generated $500 in trading volume. So that basically means you could just essentially open a position, close a position within a minute, $500 notional value. That should be sufficient to get you in. If that's all I'm asking you guys to do. Now, users who have met the requirements, you'll start being added to the private section from Tuesday onwards, okay? So if any of you who have met the requirements and you still haven't got access by the end of Friday, there will be another option, there will be a form published on Friday just to track those users who believe they should be able to see content behind the paywall, but you can't. You can fill out a Google form and we'll resolve those cases one by one, okay? And like I said, finally, users who have had issues with exchanges, so I'm not referring to KYC users here or users who are restricted in terms of KYC. A classic example that I'm seeing is users who have tried to sign up to OK Exchange, but they're already registered through another individual or through another different referral, and they can't switch over. I'm working closely with the team, and again, for those of you who wish to go down that route and want to come down the referral route, again, that option, I will write an article later this week, possibly on Tuesday or Wednesday, to discuss what the next steps will be for those individuals. There's about 30-40 people who had this issue where they couldn't switch over the referral under my name, or they couldn't KYC again because they've already KYC'd once. Unfortunately, the only workaround with that is that I have to work with OK Exchange and yourselves on a one-to-one basis to get you through into the mentorship. So there has been some sticking points, unfortunately. There has been some limitations which I have to unfortunately find a workaround with. My intention was to keep the Substack private but free. Unfortunately, Substack does not let you publish private articles unless it's behind a paywall. So for that reason, I have to set the paywall up. And I think once the mentorship is over, the Substack will be free for everybody thereafter. Okay, so again, further details will come out, but I just want to be explicitly clear that the reason we have to set up a paywall on Substack is because any content that I'd like to keep private, unfortunately, there's no free private option in Substack, because also I'd like people to read the free publications that I publish every week or every 2 weeks. So a bit of a predicament, but unfortunately, it's kind of a workaround just for the interim. All right, is that fine? If there's any questions, I'll hang fire before I kick off the stream. But I hope that clarifies and answers many of the questions that have been fired at me via DMs or emails or on the timeline. And for those of you who are late tuning into the stream, please bear with me. Just trying to get through the backlog of issues first before we start onboarding everybody. So just to be clear, the summary, the paywall will be up tomorrow from 9 p.m. UTC. For those individuals who wish to join via paying, for which all proceeds will be given to charity, that should be available from tomorrow evening, UTC time. From Tuesday onwards, I will be adding those individuals who joined via the exchange referral and they've met the requirements. You will then be added to the private content. And late on Thursday or Friday, if you believe that you should have been added, but for whatever reason you feel you've not been added, then a Google form will be available on Substack for you to get in touch with me, and we'll deal with that on a case-by-case basis, whether it's via OK Exchange or whether it's via Prime XBT. Yeah, Marvin, so if you already have an account, like I said, if you want to come under my referral, you can. It's just going to take a couple of days, I guess, as the various teams from the exchanges have to work individually per user. So I wish there was a simpler way, and sometimes it just would have been easy just to put up a paywall, sign up. It would have been all handled very easily, but the main reason that we're doing it this way because I wanted to keep a free private mentorship. It's you guys who are depositing money into your chosen exchange. You guys get to keep your funds. You guys get to trade those funds. I don't take a penny of it. Where the commission structure comes in, any money generated via trade fees during the mentorship will be donated to charity. So just wanted that to be clear. Nathan, no, you don't have to. If you've deposited $500 in OK Exchange and you've met the trading volume, there's nothing to stop you from pulling that out. You're not forced to keep those funds in there, So that's that really. Again, like I said, how do you know if you're accepted? You should start being able to see content behind the paywall at the latest on Thursday. So please give me until Thursday. And if you can't see any content on Thursday in the private mentorship, then there will be a form for you to reach out to me on the Substack, and we'll get those individual cases resolved. Okay. Yeah, spot should count for trading volume. Like I said, charity option will be going live from tomorrow, 9 p.m. UTC. Yeah, spot trading volume is fine. For those where spot trading volume is required, that should be fine, okay? Yes, it's not just futures, it's spot based as well. Yeah, like I said, for people who can't use the exchanges due to region issues, there's going to be an option to make a payment on Stripe. So again, I will be holding anybody's card details. We'll set up a payment option on Stripe. Now, the question I'm really asking myself is, what do you guys think is an acceptable amount to charge for the 4-week mentorship? Do I go with $50, $79, or $99? I'm not sure. I'm probably inclined to keep it around the $79 mark in the middle. And again, like I said, I think for the value that I'm offering and the fact that it's going for a good cause, that's literally £19, £20, $20 a week, I should say. I keep saying pounds. The mentorship will be trading focused, not just crypto focused. No, I want to keep, look, I want to be sensible about this. I'm not going to charge extortionate amounts. It's like I said, it's for charity, but I would like to make it affordable for everybody. So I was thinking more around the $79 mark, or 69 or 79, whatever it is. We'll figure it out. I'll figure out something tomorrow. Okay. All right. Shall we kick on with the stream? Is that clear? Is everything clear now with regards to the mentorship? I know so many of you had questions, but I hope that's evidently clear now. So don't forget, you can see the Substack page now. If there's already some articles there, I wrote an article about the lessons that changed everything for me. I've also published something called Mind Over Markets and Mastering the Tightrope of Trading. Give them a read if you can. Give me your thoughts, give me your feedback. If you like these type of articles or content, then please leave a comment for those published articles. But the site is now live, okay? For those who are in the, once the paywall goes live, and by the end of Thursday, you should be able to see any content that's published in the mentorship tab, okay? I think that's everything really from the mentorship perspective. Whatever it is, Ali Khan, thank you, appreciate you. But like I said, I'm just trying to give back to the community. I honestly appreciate, and I'm very humbled that I've got a platform to talk about something that I'm passionate about. So for me, I thought, well, why not do some work for charity, raise some proceeds for charity whilst giving you guys, hopefully, what you consider is value. All right, let's kick on then. Let's kick on. So the first question I have for you guys is, when you look at the market in the chat, which way is the market trading right now? Is it trading higher or is it trading lower? And which way, the second question is, which way do you think the market continues trading over the next several weeks? Do you think, looking at the market is likely to trade lower over the next several weeks or go significantly higher over the next 7 weeks? The third question is the market trending or is the market in a range-bound environment? The fourth question is, at which point, or what do you need to see for the market to go considerably higher from this current junction in point? So many of you are saying lower, trending, going lower down. So many of you say the market is currently going lower and it's likely to go lower. The question I have for you then, if that's your belief or opinion, Are you knife catching this? Have you been knife catching this on the way down? Have you taken several losses because you failed to accept the fact that Bitcoin is now out of this previous range? It's had a retest of the underside of the range and selling off. The fact that you've acknowledged the fact that the market is trending lower, is likely to go lower. The question is, why are you looking to knife catch? And how many attempts have you had trying to long what has been a clear redistribution range so far? The reason I'm asking you these questions is understanding the context. Okay. Now, one thing I will say is that in a bull market, it's easier to break through resistance. Now, whether you classify this as a bear market or a risk-off market, is support as strong as it is on the way up? Is resistance weak on the way up in a downtrend? So we know that resistance is generally weaker on the way up. Okay, there's a fairly good probable chance that in an uptrend, any resistance levels are going to continue to break. And there's a very good probable chance that in a downtrend, any levels of support are likely to break and any levels of resistance are likely to hold. Get the context right. It's not difficult to get the context right. So in terms of structure, when I look at price, I think the two immediate levels that stand out to me, again, now I'm not talking about the fact that I think price is going to A or B. I'm just openly saying that, look, loosely held opinion, the first real level of support in my opinion is that $73,000 level. The second significant level of support that I see on the charts is what? Is probably down to this 52K level. They're the two significant levels of support that I see. Now note that I'm not telling you that I think Bitcoin is going to go all the way down here. That's not what I'm saying. I'm just saying to you that visibly on the chart, with no bias, if there's two levels of support, imagine this was a 5-minute or a 10-minute or a 15-minute chart. You can't argue with the fact that this is a significant level of support. Okay? And you can't argue that this is a level of SR. Support, resistance turns support. Or we will find out when we test that level. You can't argue with the fact that all this is a fairly thin, inefficient move up. And therefore, for price to trade this zone, there really isn't much in the way of support. Okay, my expectation, again, keyword expectation, is for price to potentially trade into most of this thin move. Okay. Now, if anybody suggested this a few weeks ago, there would have been a lot of objection, like, there's no fucking way Bitcoin's going to go to 52K. You know, but in all honesty, what's to say it can't? You have to keep an open mind. What if we get some significant sell-off in Q2, which eventually brings us down to this level? Now, notice that I'm saying essentially that what if Bitcoin goes to that 52K level? You've got to think about the worst case scenario. If Bitcoin does go to 52K level, what does that mean for your portfolio? What does that mean for your holdings in crypto? What does that mean for you when price, should it trade that 52K level? Are you already prepared psychologically and mentally that this is a good buying opportunity? If you deem it to be a good buying opportunity, if price goes to that level. So you have to be prepared for these edge case scenarios. And I'll just go back to some very interesting fractals, right? So you've seen how I've drawn a level at 73K and you've seen I've drawn a level at 52k. I do not know for certain which level is going to give me a reaction, whether it's going to be this or whether it's going to be this, okay? Or whether we trade into the mid and hold here. But in terms of structure, and I'm just going to talk about structure before I talk about trading setups. I can see an argument why people are making a reference to this, where price was in a range for a good few months. And where did price trade into? We came into that support level, okay? So price traded in this range from April, May, June, July, rallied out at the end of July, retested the level back in August, and continued higher. I don't think, and again, not actionable information, I don't believe we're in this structure. This was the start of a bull market. We saw an aggressive level of QE, money printing. The macro context for me is completely different to this environment. Now, when you look to what happened later in 2021, again, you could argue that this could have been a level of support over here, right? Where you want to see price trade into. And eventually, where did price find support? It was at the lower bound of the range, right? How many people would have tried to have taken out this low here, would have tried to have longed this level here? The fact that we've been distributing for the best part of February, March, April, May. 3-4 month distribution phase where price has been topping out. Higher high, higher high, higher high, higher low in context to this swing, another higher low in context to this swing, break of the swing point, not a break in structure, right? Because we've just had a higher high, we've had a lower high for the first time during this uptrend. This is not a break of market structure. The fact that we had a lower high followed by price trading back through this level is a clearer break of structure, right? Where you now need to see acceptance above this level to even think about the possibility that price could continue back to the highs. To even think about the possibility or probability. Okay, now when you take it back, we know what happened here in this situation. We broke through this level. You can see price held short, broke all the way through. In one weekly candle, we went from $40,000 to $30,000 at these lows, okay? So for that reason, just be open-minded to the fact that this lower level that I just identified on Bitcoin, round about that 50 to 52K level, we might see price go there. I'm not saying it will go there, but you have to be open to the possibility that it could certainly trade there, okay? There's certainly a possibility of it happening. So don't let that come as a surprise if we get that worst case scenario where Bitcoin does eventually trade lower down in Q2 towards that level. I'm not saying it's going to happen overnight, okay, but you just have to be open to that possibility. So that they were two fractals or two structures that really stand out for me. And again, when I look at price here, the fact that this may act as a level of SR, the fact that we've got a similar structure here where we've got a high, a higher high, higher lows, okay, equal lows into a higher high, swing fail, break of the market into a lower high. Now, for those of you who've been following my tweets, if this is distribution, I talked about the fact that watch for the throwback into distribution, followed by a good shorting opportunity into a phase of redistribution, okay? That's what I'm looking at when it comes to the market. Whether this level holds, and if it does, or whether we come in slightly lower into that 72K level, which was the origin of the breakout before we saw continuation higher, that's the first real level, I think, of interest that I can certainly see myself longing. Okay, I don't think from a swing trading perspective, now I want you to understand this carefully, from a swing trading perspective, I don't really see why I want to be pissing against the wind and knife catching the long opportunity when I think it's much safer to wait for the rally. If there's a rejection in price, to look for the short scenario, trading lower down. Until there's clear acceptance above where we've rejected from, then I can think of switching bias and trading this range here, okay? But until that happens, I would much rather wait for a short squeeze or a dead cat bounce into that 87, 88k level, looking for the short opportunity into that lower bound of the range. So again, high time frame context. I'm not mapping out the trading scenario. I'm just talking about the context here. Now, the other points that I'd like to make, so just to recap, be open-minded to the possibility that we may see 52k over the coming months. Be open to the possibility that this could act as a level of support. Certainly, I'd be interested at that 67 to 70k level, which was the origin of the move up. I'm not really actively looking for longs. Yes, there might be a bounce up, but really, you're going against the trend. Why are you going against the trend is my question. Is it worth it? Or is it worth waiting for the bounce into a level of SR? And then let's see where we are. Okay, we may get an over back under again. That to me is indication of weakness, that we can't find acceptance above 88 to 90k. Weakness is a selling opportunity to go or to flow with the trend. Now, in terms of the trend scanner, let's bring up the moving averages. Let's start off on the weekly. What do you have here? Look at what price is telling you. There's a 12, there's a 25. We had price trade below that level, reclaim back above. It's highly probable that if we were bullish and likely to see continuation higher, then I would like to have seen the 88k level hold. The fact is that we are now at 80k. And I think there's every possibility that we could eventually go into some sideways range bound environment before we understand what the next likely direction is on Bitcoin. If you look back at what we had in, again, 2021, right? Price sold off significantly and it remained range bound in here for the best part of January, February, March. We had a swing fail, well, not a swing fail, price traded above this range for several days before we saw continuation lower down again. Okay, this is a phase, a classical phase of redistribution here. The fact that price is in a range for several months before the market can't find acceptance above this level. 1, 2, 3 attempts at resistance. Your resistance level is very clear. It's this here. Okay, this was the origin before we saw continuation lower down. Retest, tries to trade that level, can't hold it, breaks down, trades the other side of the range, and it continues to sell off. So again, looking at this, despite the fact that we are in some level of, you could say, rotational grind down, I think you've got to be open to the possibility that perhaps, right, okay, we may see this as a range bound environment over the coming weeks. That's certainly one range where I think it's worth paying attention to. But again, the context tells me that you want to flow in with the trend, with market structure, with the context of price, until there's a clear shift in that direction. So when you look at the weekly, we're below the 12 and the 25s, okay? And generally what happens is when we trade below the 12.25s and we see consolidation under the bands, but we can't reclaim that, you get another leg down. So just something to watch out for over the coming weeks. Now, when you go into the daily, at any point, has the daily switched context into giving a bullish signal? No, it hasn't. And like I said, when you see price compressing under the bands, then there's a decent chance that we could pop the bands and continue going higher. But when you see expansion away from the bands, that's the direction that you want to flow in. And therefore, any mean reversion trades back into the bands. What's one of the reasons why I shorted 94.9? We had price squeeze back into the bands. That's your throw back into distribution. That for me was a sell signal into a clean SR level of the previous trading range. If you marked out the previous trading range, that rejection there was good enough for me. That's where I hit the short, and I'm still short on the market from this level. Where I took the long was at 84k, and I closed my trade at 89k. Again, why did I close? I closed it into the bands. It's a level of resistance. It's the underside of the previous trading range. Where did the market reject from? It rejected from the underside of the range, from the 12 and 25 daily EMA bands. The context is to the downside. Is that clear? Now, one of my favorite indicators from a very, very high time frame perspective is what? It's something I've always talked about every cycle, as far back as 2018, 2015. Keep an eye out on the 200 weekly moving average. Now, I'm not saying to you that price is going to go there next week, next month. It could take 6 months, 12 months. But understand where that 200 weekly moving average is and look at the trajectory of that line, okay? Following it in its path, at some point, will price trade the 200 moving average? If you look at every market cycle on Bitcoin, it's been a fantastic buying opportunity, or an area where you should be flipping context again. You look at this in 2015, you look at this in 2018, you look at this in the COVID crash in 2020, aggressive capitulation below the bands, back above the 200, continuation higher. So at present, price is trading that 45k level. We're still a significant way from there. I don't know when or if price will trade that level anytime soon. But again, I think if you look at it every time, it's been what I perceive as, or what I've understood is value, an area of value, an area where it's been attractive for buyers. And I think when you think of price from a high time frame perspective, for those of you looking to buy Bitcoin and sit on it, should we trade the 200, wherever that is and whenever that is? Let's see what happens. But just something to keep in your chart. You don't have to look at it every week. Every few weeks, it will suffice. Okay, but it has been very, very clear. Now, one of my favorite indicators outside of the 200 is the 21 weekly moving average. When it comes to context of price and trading, I always try to stay on the right side of the 21 moving average. Again, this isn't actionable. This is just purely contextual based. If you look at the 21 moving average on a weekly time basis, when we trade through the level and reject on the underside, I want to be flowing in that direction. The second thing that I've always talked about with moving averages is understand the trajectory. Not just the price, but the trajectory of the bands. Look at the trajectory of the bands here. Is this going on the way up or the way down? The momentum is to the downside. So when you see a reversion back to the mean and price stalls and it loses the bands again, that increases the probability that we could continue ranging or trending lower down again. And you can see thereafter, every throwback or every reversion back to the bands is a selling opportunity until a range is established. Until the bands, look at the momentum of the 21. This is deceleration on the way down. And what happens to that momentum in the range band environment? Deceleration, the velocity subsides, momentum dissipates, and we start forming a range band environment where price starts oscillating over and under and over the bands, okay? That's the context shift that I want to see. So point number one, it's not just about price, it's about understanding the structure of price, but also the trajectory of the bands will keep you on the right side of the market. Now look at this from a bullish perspective, how price has respected the 21 as a buying opportunity on the way up. And it's breaking through resistance on the way up. Again, momentum dissipates, price trades aggressively under the bands, aggressive move back up into a throwback, rejection, capping price, trend down again, until we see some form of range bound price action, trajectory shifts. You've got to start flowing with the trends, looking for longs on the way up, okay? So you can backtest that yourself. Here's another example. Price trades through the level. Look at the extension away from the 21. Reversion back into the 21. Short-lived momentum above, but the sell-off continues lower down, okay? Where are we now? Does this look bullish to you? Do you really want to be trying to knife catch this and have death by 1,000 cuts? Or is the safer alternative that over the coming weeks, if this starts rolling over and we get a throwback into this level, that might provide a good long opportunity from this SR level here, but you've got to be thinking about resistance and look at the overall trend of price. The fact that we've distributed up here. Until we see acceptance above that 93k level, and the reason why the 93k level is important, I'll touch upon very shortly, but for now on the interim, the obvious levels that really stand out for me is this zone here and this zone here. I don't care about calling price going down into this level. It doesn't mean fuck all if I haven't traded it. I don't care about price going up here. It doesn't mean nothing to me if I haven't traded it. Well, I called it on the timeline. I called it on my stream, but I didn't trade it. It doesn't mean anything, okay? I have to look to trade the moves that I want to take, the setups that I want to see. So calling it doesn't mean fuck all, okay? You don't get any rewards for calling it, but you never traded it. So any questions around the 21 that the context is telling you just to watch out over the coming weeks? Look out for extension lower down. We might at some phase get some throwback. That's going to be a very good range to trade, okay? So whether we get some throwback or support from here, that's going to be a very good range to trade, okay? Fantastic trading opportunities. And redistribution is volatile, okay? Look at the average true range for this redistribution phase. It was between 33,000 and 48,000. So equally, let's just assume that if the low isn't at 68 and the highs are in at 88, that's a decent 20,000 ATR that you can certainly trade for in terms of rotational trades, okay? So I'm really looking forward to trading this market over the coming weeks. Now, whilst we're on the weekly time frame, what did I mention in terms of being cautious about price breaking down because of what? Remember what we talked about in terms of the MACD? That if you look at price in previous cycles with the weekly MACD, Look at the momentum. Look at the 21 moving average. Again, look at the momentum. 21 moving average. Look at the momentum here. Okay. Not as aggressive, but the fact that we lost any bullish momentum puts us in a range bound environment. And at what point did we flip bullish or have a bull cross? It was over here. Look at the flipping momentum. That was why I got remained long looking for the breakout. But look what price is telling you here. Okay. So the odds are really stacked in terms of really pissing against the wind from a swing trading perspective. If you're scalping or intraday trading, that's fine. Ideally, you want to go with the context. But if you're intraday trading or scalping, of course, there's going to be opportunities for you on the 1 minute and the 5 minute chart. You're going to get trends up and you're going to get trends down. But I'm talking from a high time frame perspective, a high time frame swing perspective, where I'm averaging 3 to 4 trades a month on Bitcoin. I want to be flowing in the direction of price. And therefore, I'm not favoring longs aggressively. I'm favoring shorts more aggressively. And that's not me being bearish. I'm just going with what the market is telling me until I see a reason to stop shorting and start being more aggressive on the longs. Okay. Throughout the entirety of 2024, right? Late Q4 2023, all throughout 2024, I've been aggressively looking for longs. In all the streams that I covered last year, what did we do? We talked about buying these lows, buying this, longing this, buying this. Okay. Until we get a shift in context. I've hedged, clearly stated where I'm going to hedge and clearly stated where I'm going to get out of my spot position. And I've got 2 short positions running on the market now. Okay. I've shared everything clearly. I've put my balls on the line and I've talked about what my plans are and how I'm looking to trade this market. And for now, at this moment in time, I don't see any reason to be rushing into longs other than short-term trading. I can't go against this momentum. Captain, ping me a DM, please, yeah? Afterwards on Twitter. I'll speak to you directly. So now you've understood the context. I asked you at the start of the stream, which way is price trading? Which way do you think price is likely to go? So you don't necessarily have to short the market. What you can do is be patient in buying. Don't piss away your funds. Don't start knife catching. Don't start dollar cost averaging on the way down and then get blown out, or you've got no funds left. It's easier to let the knife fall, let it fall to the floor, and then you can pick it up safely, okay? As opposed to trying to catch a falling knife. Where people fuck up and where people go through or burn their accounts is when they trade against a trend. You do not want to be trading against a trend unless you're very proficient at counter trend trading. Now, I want to just step back onto the monthly time frame. The one level I mentioned on the timeline last week was the 93k level. That this monthly SR level, yearly open level, is going to be very, very tough resistance until we see price accept above here. Would I then consider the possibility that we can trade the highs? What type of candle is this? Is this or is this not a bearish engulfing candle? Retested 50% of this candle. There's a swing low. There's a swing high of that candle. Where does the mid-level come in? Somewhere around here. The fact that we couldn't find any acceptance above there was a reason for me to get out my longs from 84 into 89s and let the 94.9 shorts continue rolling down, as well as a hedge that I've got here against some of my spot. I am directionally short. I've sold some of my spots. Bitcoin, I still hold some, but this is now weighted in a directional short from what was a delta neutral position, okay? And I talked about flipping context, that I'm looking for longs until I see acceptance below. The minute I got stopped out on my short, I aggressively switched. Sorry, the minute I got stopped out on my long at 86s, I aggressively switched short, looked for the long back up, into the short back down again. Right, let me just catch up with the chart. Yeah, this was not a planned stream. I was supposed to start the mentorship this week, today actually. It would have been a very long video, but again, my apologies, sincere apologies. We were unable to onboard everything because of the issues that users have had with KYC or signing up. So I've just extended the launch date to next week, just so that I can ensure everybody's on board. I didn't want anybody to like deposit their money, hit their trading volume, and then get pissed off with the fact that they've not been added to the group, or the group's been launched and they're not part of it. So I'd rather get as many people on board first and foremost, because there's a lot of good quality content that I want to share with you guys, especially when it comes to my mindset, trading mindset, what is the right mindset to have, and some of the processes that I go through, which we don't really see people talking about openly, especially on the timeline. You know, again, various paid groups. I've not really seen anybody come out with a good process or a foundational process. So that's why we're doing today's stream, just to add some clarity around the mentorship. It's not been easy to set up, but at the end of the day, I wanted to keep it free and have proceeds go towards charity. So, okay, Kirill, you've asked a question. You're confused about the mentorship with the deposit and the other thing regarding the price of potentially being $5,200. So look, very simple. If you've signed up via the referral and you've met the requirements of depositing $500, trading $500 in volume, you will be added to the mentorship. The paid option is for those individuals who couldn't sign up to an exchange partner for whatever reasons. The alternate option is to pay a certain fee, which will be donated to charity. That's all it is. It's either, you can either come in via the exchange route, exchange referral route, your funds, you get to trade it, or you can come in via the paid route. You pay for access to the group. All those proceeds will be given to charity as well. That's all it is. Why wouldn't I use Discord? I just don't like Discord. I think Substack is much better, because I will be publishing many articles this year that I'd like to keep everything in one consistent place. I don't want to have a Discord. I don't want to have a Substack. I don't want to have a Telegram. I just want one uniform environment where I can publish all my content, all my videos. And when I come back to streaming, I'll have some videos on YouTube, I'll have some private content or future content on the Substack. That's why. Yeah, don't worry about anything. I know that a lot of you guys think you're missing out, but it's not even started. I will try to include all of you. But anyway, look, let's get back to talking on the charts. So in terms of context, in terms of trading setups, let's map out the market. If you look at the monthly chart, it's really difficult to counter trend trade this, okay? And the other thing which I want to point out as well is something I've always mentioned, is that when you see tops and bottoms in market, on the higher time frame, look at the wicks. Look at the wicks here. And again, quite telling. Look at support here. So are we seeing signs of this type of bottoming structure, bottoming process? You know, it takes 1 to 3 months. 1 to 3 months. A couple of months here, 2 months here, 2 months here. We're not getting any indication of a bottoming process just yet. Okay? Now let's talk about trade setups. First, let's map out the market, high time frame markets, okay? That's my definitive range, high time frame range low. I'm going to use this as my high time frame range high. Taking the mid of this puts me into this level here, okay? Give or take. Taking the mid of this is my range quarter, that 85k level. And the reason I'm doing this is just to give a very quick summary of ranges, marking ranges and levels. There's no right or wrong way to do this. It's what makes sense to your system. But I'm just quickly thrashing this out in the higher time frame. When you look at price here, okay, you can see that we could have classified, if we wanted to, this whole zone as one range. The fact that we're now trading below this level and we've got this next level of interest here is what I'm potentially interested in from a long perspective, okay? Are we going to see price trade lower down into this level before we can start thinking about a long back up into here? That's one way you can map out the range, okay? Another way you can do this is, and this is probably my preferred route, is this is one range. That's one range area, okay? The second one was this here. And you're essentially looking to trade levels. The third one, it's a tough one really, would probably have to be somewhere around here. Okay. They are the three zones that I am looking to consider trading. I know how I want to trade them and what I'm anticipating in terms of price. Okay, so you've got the distribution zone as one range. And if you just keep it as simple as levels, okay, trading levels within the context of price, we are in a downtrend. If you look at where resistance is, resistance, over, back under, sell off, underside retest, sell off, okay? Support areas, somewhere around here. Taking the mid of this is there. And that's all I'm concerned with. I'm not in this game to draw an arrow all the way down to 50k. I'm saying to you, be open to the possibility that we might go down there, okay? I'm not calling for it. And even if I call for it, did I trade it? That's all that matters, okay? I don't care where price is going. All I'm looking for is good trading opportunities. So I think there's a decent chance if we find a level of support at here, or alternatively here, I would be interested in some form of a long if we see the market rotate and oscillate in this range here, okay? That's your resistance. Support needs to be established. We don't have enough data point just yet, but I'm looking for a range to be established and trading the extremities of a range if this is redistribution. All right. Is that clear? So this is probably my preferred way of trading this current price action. Now dropping down onto the daily stock, one of the reasons why I was leaning towards lower prices because the daily stock was rolling over. And if you look at this, again, this from my contextual system is telling me not to look for aggressive longs until the daily is oscillating at the lows. Then I will consider the possibility of a long. But my system, or contextual based system, not executional based, contextual based, is telling me don't be rushing into longs just yet. Yeah, I might miss a good long opportunity, but part of a trader is understanding what conditions your systems work best and in what conditions or environments should you be executing your trading edges, your strategies. And for me, it's very questionable or very low probability that I would consider looking for a long just yet until I see this come down here and maybe then price takes out this low. We'll see what happens after that. Now, I can appreciate that on the CME, we're probably going to gap down. Okay. And we keep getting gap after gap every week. Again, there could be a case for, look, you know, this low may hold here, right? There could be a case for where we backfill early in the week, this gap fill here. We'll see what happens after that. Okay. Still got a gap there, slight gap that needs to be filled there. So I do suspect it could continue being choppy. We've got CPI this week on Wednesday. I'm not really expecting anything. I'm not really expecting much to happen. I think CPI could come in line with expectations. We'll just have to wait and see. But I certainly see reasons why there's certainly a level of hedging or de-risking into that CPI event. But again, in terms of myself in looking for trades, I'm comfortable in the short. I've got 2 shorts running. I'm comfortable with letting those play out, and potentially looking to just day trade the market. Okay. So is that clear as well? So I'm not really looking for longs until I have a clear reason. I understand that this, you know, people are looking at this low here and thinking, yeah, this is a really good opportunity to long. I think what's really important, it's Sunday. The markets are very thin. It's easy for price to piss through these levels. Fine. Where it might be interesting is if we take out these lows here, maybe we get a rejection on the inside and sell off one more, drive lower down. I'm not too sure. Maybe this is the low and we get a bounce up into 85s, you know. Could happen. I probably won't be trading it. I'd much rather wait for price to bounce higher. Lower high, give me another lower high. I'll look to trade the market back down again. Okay, that's what I'm thinking about. Because the context is clear. The context is very clear as far as I'm concerned. So although I'm open to the possibility of price squeezing higher, if I didn't short the market, right, when the market was trending in 2024, if I didn't short it, you know, I didn't nail the shorts here. I was more focused on nailing the longs. In this instance, I'm not focused on nailing the longs. I'm looking to trade the shorts, trade to the short side, okay? Trade to the downside, looking for those spikes up, continuation lower down until we can build a base. But again, I do believe that this is likely to be a decent trading range where there's going to be opportunities to long this maybe, and there's going to be good opportunities to sell this back to the mean, back to the mid, okay? And then after that, we'll see what happens. Now, what's important at this level is, what did I say at the start of the stream? In bull markets, resistance is easily broken. In markets that are risk off or trending down, is support likely to be as strong as a trending market to the upside? No, it's not. In a downtrending market, people are looking to get out of the market, okay, in these situations, until you see some form of capitulation, some form of bottoming process. Now, yes, certain levels of support will rebound or bounce. You're going to get buyers, you're going to get day traders, you're going to get scalpers, you're going to get potentially intra-week swing traders stepping into the market because they think Bitcoin is at value here, a value in the sense where for the next several days they think price should be higher than where it currently is, and they're going to step in and look along the market. But how much momentum or upside will we get is another question. So price coming into this level and how it reacts is very, very important. Generally, you want to see price coming aggressively into this level and reacting. But if price is just slowly grinding into this zone here, even if I see aggressive shorts opening at the lows, it might give a setup in terms of the flow, in terms of the footprint. But I know that shorts piling into this level on the way down, okay, is not a high of a probability setup as it is in a market that's contextually looking to go higher, like this, like this, like this. Look how short-lived price was. Aggressive sell-off, wick, 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 aggressive move up, okay? Same again. Aggressive sell-off, look at the wicks, buyer step into the market, fast move back out of from the lows. Same again. If we don't see that context in this instance, where yes, shorts might be piling in, but you get a very tame bounce and it rolls over again, that increases the probability that we're likely to go lower into a slightly more significant level of support, given the inefficiency here, okay? That's what I'd be thinking. But I'm very, very pleased, in all honesty, guys. Look, for those of you who tune into my streams, I've been very open, very transparent. I've always tried to give you actionable trade ideas, actionable setups. I've tried to keep it up to date on the timeline. Okay, I'm not a signal service. If you're going to come back to me and say, XO, you never tweeted when you enter the trade, you can fuck right off, because I'm not a paid signal. I'm not a paid service. There's paid groups out there that do that. If you want to join them, go ahead and join them. The point is, never in my trading career have I ever relied upon anybody else to give me a signal to long or short a market. Never, ever. Yeah, I'll have a look at what other people are doing. But ultimately, I can honestly say for the last 8 years, every single trading decision I've made is down to my own reasoning, not because some paid group is going long or paid signal is going long. And the only way you're going to improve is, yes, there are good paid groups out there that can act as a mentor to you, but your reasoning to join those shouldn't be the fact that I'm looking for a signal service, because you will never understand the mindset of whoever is sharing that signal, what they're thinking, what their track record is. But what you can pick up is the reasoning of understanding price, flow, order flow, context, and then coming to your own trading decisions. Don't try to copy somebody else's style. Always develop your own style. So, you know, all this talk on the timeline, oh yeah, but you never talked about when you executed the trade. Fuck off. I'm trading my own P&L. I'm not sat there with my phone in my hand ready to tweet, oh guys, I'm about to go long here or go short here. When you're trading size, you don't give a flying fuck about the timeline, okay? I'm not here to impress anybody. I'm not here to impress the market. The market doesn't give a fuck about me. I'm just here to trade and execute in silence when I see a good setup. And I have to be cognizant of the fact that I could be wrong. And if I'm wrong, I need to know where I'm getting out. Okay? That's why when you see it's difficult unless you're, I believe, synced up to some feed that's going to copy your trades and publish it to some service, fine. But by no means am I ever going to just say, yeah, I'm going long right here, right now. Sorry, but that's for you to decide and make that decision. No, nobody pissed me off. It's just the honest truth. It's not. Sorry, I don't mean to sound pissed off. It's just the honest truth. Like, never in my life have I ever relied upon anybody at any time to give me a signal to go long or short. All my mistakes, all my learning experiences have come from everything that I've done and everything that I've journaled. So that's all. If you want to improve, take responsibility. And hopefully with the 4-week mentorship, I can hopefully at least hope to give you some sort of process that you can take away and develop. You see, I was reading a book again for the second time, Best Loser Wins. And it's quite compelling what the author said. That if 90% of participants who look to trade the markets often lose, okay, so basically almost up to 90% of participants never make it in trading. What do you need to do to make it in trading? You have to do the opposite of what the 90% are doing. You have to go that extra length. You have to go that extra mile. You have to do almost the inverse of whatever they're doing. You don't want to be copying the systems or processes or the way they trade. You need to come into your own. And that's where the mindset comes in. It's your mindset that's going to define whether you have a successful trading career or not how technically good you are. I've seen very, very, very good technical traders who've blown their accounts. Explain that one to me. There are traders out there that I know personally who are technically far superior than me, and yet they've blown their accounts. Is that a technical reason that they've blown their accounts, or is that their own discipline, their mindset, the way they approach their trading? It's down to themselves. So that's why you can be half decent at technical analysis, but if you have the right mindset and the right approach and the right discipline and the right patience and a process, that if you can journal the next 100 trades, can you then know probabilistic wise what you're likely to do in the next set of 100, 200, 300 trades? You're looking to continuously improve. If you've just nailed one good trade today and you've lost one trade next week, but you've not journaled it, and now in the next, and then in the third trade, because you took a loss on the second trade, you're now going to revenge trade, or you struggle to put on the same size. There's no process there. So there is the mental side of trading is massive, and I can honestly say when it comes to trading Bitcoin and probably a couple of the markets, that my mindset has really transitioned myself into a much better trader than what I was in 21, 22. I've become more methodical in the things that I do, whereas before I thought I was methodical, I was from a technical perspective and from a journaling perspective. But it's only when you start thinking about journaling, not looking at your stats and think, yeah, I've had a good week today, I'm up 3R. That doesn't tell you anything. It's about your mindset. What experiences did you feel during trade executions? What was your emotion like? Did price go to your target? Did you start taking partials on your trade setup when you should have really floored and been more aggressive? Did you start adding to a losing trade, or were you quick to cut a losing trade and keep your winners big and your losers small? Keep your losses small, I should say. So mindset, it really is a massive, massive part of trading. And I think once you shift your ability to recognize that, you don't want to be like everybody else out there, like the 90% out there. If you don't want to be like them, then what do you have to do to be in that top bracket of aspiring traders? So that's where the real journey starts, is when you understand that. So I think it's an interesting book to read. And it's certainly given me food for thought as to how I want to approach markets, which I'll probably write about over the coming weeks. Yeah, do you know, the Thinker's just left a comment and he said, if some of the mentorship content are introduction level, I would love to see you pointing us to resources that are more advanced, or perhaps an extension of such topic from your part, if possible. Yeah, I would actually like to do something more advanced, much further down the line. But for me to talk about some of the advanced concepts, I can't go from 1 to 100 if people don't understand the basic concepts. And that's why I really enjoy the fact that over the coming months, I'm going to be writing and sharing a lot more on the Substack, and this is free content. I'll be talking about order flow, I'll be talking about market profile, I'll be talking about the mindset, the psychology, I'll be talking about some of the processes. I really want to talk about now for myself that even though the fact that I've been trading for the last 9 years, how I'm trying to evolve even more over the next 3, 4, 5 years. There are markets that I'd like to trade, you know, CME futures. I'd like to trade NASDAQ, equities. I don't have enough data on trading equities and NASDAQ. I don't even have 40 trades on SPX to understand how I am as a trader or what type of style I'm suited to when it comes to trading SPX or NASDAQ. Am I a day trader? Am I a swing trader? I don't have those stats yet. So part of my journey for the next year or so is to develop those stats and to trade those markets more proficiently, to find out what my edges are and to trade them more frequently. And it could evolve into me becoming a scalper, right? Scalping equities whilst I swing trade Bitcoin. It could very well happen. 2 different markets, 2 different strategies, 2 fantastic opportunities for me to succeed as a trader, 2 completely different styles. That's where I'm trying to figure out how adaptable I am as a trader to different market environments and how many strategies I can create that over the next 100, 200, 300 trades is going to allow me to become a winning trader. So yes, we will be having content around that much later, much later in the year, probably November, December time. All right, so I think that's all there is to it really on Bitcoin. I really don't have much more to say other than the fact that when I look at this market, I do believe we are likely to see price trade down to 72, 74. Look, I could be wrong. You know, I have to put my hand up and say I am a trader. My views are often wrong, and my trades, you know, I don't have. Believe it or not, people think, oh yeah, you know, Exo, you nail a lot of trades. My overall win rate is lower than what people think. My win rate is below 50%. And the reason it's below 50% is because when it comes to trade execution, I have a couple of attempts. I have a 3-strike rule to get the trade execution right. So if I'm taking a couple of trades around this level and I get them wrong, I'm going to put that down as a loss. Okay? But the fact that it's one trade setup, but I've had 3 attempts, 2 were very minor losses, and then on the 3rd attempt, I nailed it. That is still 1 trade setup, but in terms of win rate, it is going to skew my win rate heavily to the downside unless I amalgamate the trades and classify it as 1 trade and amalgamate the overall risk to reward profile. But win rate is not important in this game, right? And I'll tell you another fact. What if I said to you that people who trade CFDs have a 65% win rate, yet they can't make money, yet they lose money? Why do you think that is? So just think about what I just said. If people are out there trading CFDs and the majority or the stats are telling you that people actually trading CFDs have a 65, 66% win rate, what does that actually tell you about them? They've got a very good win rate, but yet they keep losing money because their profit factor is shit. For every $1 they make on their wins, they're losing $1.66 or $1.50 on their losses. Their losses are far exceeding their profits, yet they have a high win rate. So profit factor is what matters. Expectancy is what matters. Sharp ratio, Sortino ratio. Not, oh yeah, I've got a very high win rate. How much size did you put on that trade where you're winning? Or did you lack the confidence to size up correctly on those setups that are your A-star setups? Yet when you lose big because you keep adding to your losers. You don't have a stop in place. You counter trading against the trend. They're the reasons why you fuck up. And then when it comes to actually trading your setup, you've lost confidence now because you can't mentally reset because you've incurred so many losses that the next trade you take, you're trying to pull back whatever losses you have. So you'd start trading your P&L instead of actually trading your system or strategy because you failed to reset mentally as a trader and you didn't follow your processes. So from experience as well, these are the issues that I've had over the years when I was learning how to trade, and I'm still continuing with my progression. I don't feel I'm nowhere near the levels I honestly believe I can achieve. So for me, I want to get to the very top, and I don't believe I'm anywhere near that level yet. All right, let's move on to Ethereum. That was a short reason, the short that I took in Ethereum, so I've closed that out. I closed it back down at 21s. I'm no longer in that position. The only position that I've got on the market is two shorts on Bitcoin. That's it. That's the only position that I've got in any of my trades now. I'm holding a few spot bags, some shit coins, you know. Unfortunately, like I said, my risk is calculated on that perspective. It's not too much of my P&L. Less than 5% of my overall holdings are in altcoins at this stage. Your eyes, what do you want me to do? Turn down the... let's have a look. Turn down the... Don't worry, I've actually got a new layout, a new template for moving forward. So I'm actually moving away from the... white background and the white and black candles, so apologies if the brightness is an eyesore. So I think Ethereum, in all honesty, I mean, when you look at this, it's pretty fucked, isn't it? It's going to take time to recover from the structure from a high time frame perspective, but we have to wait for a base to build if ever we want to see a continuous bullish market. This is not likely to flip into a bull market anytime soon. But I think with that comes good buying opportunities over the coming months. So we'll have to wait and see. But overall, you look at the weekly, 12.25 trending down. You look at the daily, continuous downtrend. Every reversion back to the mean is a selling opportunity. Same again. Exact reason, into the mid-level, into the bands. Thank you very much. I'll sell that. And that's all I've done. Okay, going with the flow of price. It's not really a great deal to say on ETH USDT total 2. Again, unfortunately, it's, I think, in all honesty, if there's a level that stands out for me, I think, again, this is a loosely held opinion. I will change my bias if I see a reason to do so, but I think we come back into this level here. Fill in all this inefficiency, at least down into this level here. So unfortunately, further pain in the market. Total 3, same again. Fill in all this inefficiency. Yeah, there's going to be a bounce, don't get me wrong. You know, we'll probably see some move up eventually before we see continuation lower down. This is one structure that you should familiarize yourself with, where price... stair steps, okay? It fills out all this inefficiency back to the origin. Then you've got a chance of a kind of a long setup. But each one of these is short, 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 short. Stop shorting down the lows. Start thinking about longs. When you come to this phase, you don't really want to be shorting too much more. You've caught the meat of the move, or caught most of the trend down from each level. Now you want to be thinking about, right, where can I long the market for a squeeze back up? And this, generally when it happens, it's a couple of weeks of bullish price action, which wipes out months of downtrending price action. And when you look at this here, this is indicative of that. There's the origin of the move. Every spike up now is a selling opportunity, selling opportunity, selling opportunity. So again, maybe spike down, selling opportunity again, lower down, okay? Trading opportunities both ways in the market, but really you want to be flowing with the context of price. Yeah, hit the likes, people. I'd really appreciate that. Helps with the algorithm. Oh yeah, here we go. There we go. Tweeted. ETH faded. When you look at this, I tweeted this structure on the March the 3rd. Fast move up, it just stair steps down. There's a reason for me to short ETH. Took profit into 21.75. Trade done. Okay, you kind of get the gist. See that? Just ignore the time frame aspect. Just imagine this was a 5-minute fractal. You go on any 5-minute chart. In a downtrend, right? In a downtrend, I want you to remember this. In a downtrend, when you see those fast spikes up on a 5-minute chart, they're likely to fade in this manner. And you can watch that and trade that all day long. Just get used to the flow of price and structure. Okay? That's why these fast moves up, stair step, resistance, resistance. Finally got into support. Okay, so I've stopped shorting Ethereum now. Ethereum is, I believe, where is it? Just at 2K. So for me, I'm not really looking to aggressively short any markets, if I'm honest with you. Well, let's just say at this stage, I'm not looking to aggressively short any markets now, okay? I'm happy with the shorts that I had over the last week or two. I'm content, and I think now, if there is a bounce, then let's see what happens. But for me, the risk of shorting any of the market is just not there. When I look at Solana, again, it's coming into these key lows here. So I am interested in possibly wanting to see price trade into this zone here. And then we'll see what happens, whether I can get a day trade or an intra-week trade from 120s back into 150. Okay, I did talk about the fact that if you look at the fixed range volume profile, which is over here, and let's just take, let's just take this all the way through to here. There you go, okay. 120s is the value area low. That's your point of control. That's your value area high. So again, we have a thin 80% of the volume from this time point to here has been contained within this range. So contextually, if there is any moves below the value area low and we get acceptance back above the value area low, I'm looking to trade that into 150s over the coming weeks if I get the setup. If there is a rejection from the value area low, I don't have a trade, guess what? There's your range high, there's your range low, there's your mid, okay? That's your highs there, there's your lows. That is now the next range that I'm looking to trade. Until I see price come back into here, I'm not concerned about doing business here. I'm thinking about right, where can I trade this zone next? How do I want to approach it? Do I continue looking for shorts and go with momentum lower down? Or is this going to be a deviation and we get a squeeze and a pop back up before we see another leg down again? Okay. So would short this, would potentially long here. Now, when you look at NASDAQ, I think, again, in fact, let's look at SPX. I'm going to wrap up on SPX and the NASDAQ. When I look at this, we've actually come into a very nice level of SR here. Now, I don't know if we're going to get one more push down, but I am tempted to long a level on the SPX because we are in a range-bound environment. Yes, it's been an aggressive move down. We've taken out these lows here. If I can see one more push into here, then I like the idea of trading price back into this zone here, into that 58.80s. So taking it from 56.60s back up into 58.80s or 58.60s. Somewhere in here is what I'm looking for from a trade setup. Okay. I don't know if we're going to get one more move down, but I do believe that at some point this will probably revert back to the mean higher again. Same on NQ, right? I think that we might be close to a bounce, give or take, maybe one more push lower down. So again, looking at this zone here on NASDAQ, this is the area that I like for price, where this was the level, the consolidation, price pushed higher, retest, pushed up higher, okay, into new all-time highs. We're now back in that trading range. This is from September. Now we're in March. 7 months of price action within this range. Looking for price to become exhaustive into these lows. The sentiment's pretty shit, right? So can we trade from 1960s or 1970s back up into 21s? I think that's a good trade setup with a very clear invalidation below here. The key is just letting price do its thing, then showing you when to step in, okay? That's why I think in terms of Bitcoin, inevitably at some point, I like the idea of a long. I've lost my ranges, but from the levels that we discussed earlier on, okay? Is it going to be this level here where we see a reaction from? Right? Consolidation, expansion higher. Buyers aggressively step into the market, lifting the offers and price trading higher into this high point. So the range, once again, for me, is this level here. That's my range high. I'll do this in green. And this here is kind of the range lows that I'm looking for to consider the possibility that all this area here, like I covered in my stream earlier on, might be the redistribution range. Okay, over the coming months. Or is this a phase of accumulation for the next 2 quarters before we see price push up into the highs again? Okay, so I like the idea of a possible long opportunity here into this SR. If we break down, we step aside, we wait for something clear to set up. That's all there is to it, okay? So notice that although we are against the trend and the moving averages, I'm still open to looking for longs here at the extremities of the range lows. Open to the possibility that this could be redistribution or it could act as a level of support. The key thing is remaining fluid, okay? Don't get caught up in a bias. Have a contextual bias and then trade around that. but be ready to flip to the opposite direction if you see a reason to do so. All right, is that clear? I think that's all we've got for today's stream. Almost nearly 2 hours, bloody hell. An hour and a half, I should say. But that's all there is to it, really. Yeah, interesting. That 76th level is certainly interesting, isn't it? If you look at all the yeah, there's a lot of potential demand for a reaction here, which makes me think that as long as markets don't fall off a cliff. So basically, to summarize, if I think Nasdaq and equities haven't fully broken down yet, and we're not heading into a recession, and there's a probable chance that we bounce on Nasdaq and equities, then I think it's quite probable that Bitcoin will continue being range bound between that 72, 75 level up to I'd say around about, let's just say 80 to 88, 90k level. Let's just leave it at that. Loosely held opinion, but that's what I think. I think we could see a very good reaction into that 72, 74, maybe 70, maybe 69. There's a lot of bids resting in the book. Let's just see how price trades into those levels. Same on the spot side on Binance is when you look at the book depth, very thin supply side. Can you see that? All right. So unless people are replenishing the offer on the sell side, very, very thin supply to 86k. Compare that to the downside, fairly heavy demand, okay? So again, another reason why I wouldn't be looking for shorts at this stage. Tentatively, keyword, looking for longs, but wouldn't rule out the fact that for now, is price likely to drift lower? And then we might get the reverse back up into this range, okay? That's what I'm looking for. So we are counter trading against the trend. Therefore, the margin for error is very small. The probability is against you. So if you're wrong, you're going to be wrong very, very quickly, and you have to cut the trade, because then at that point, the market will continue. So there's certainly a level of interest at 76, and then after 76, I feel it's this 68 to 70k. They're the two levels that could potentially get me interested in longing. Keyword, long. I'm not looking to buy spot, just looking to long the market. All right, that's it. That's all there is to it. So I wish you all a fantastic week ahead. Just to recap, the paywall will be up tomorrow from 9 p.m. And then members will be added to the private mentorship for those who have signed up to the exchanges throughout the rest of the week. And anybody who feels as though they've not been added to the mentorship but should have been accepted onto the mentorship, I will leave a Google form on Substack for you guys to fill in and get in touch with me, and I'll put you in touch with somebody at the exchange who's managing the accounts to help expedite your issues. All right, thank you very much, guys, for all the support. And hopefully I'll catch you probably on the timeline, but certainly on Substack. Wish you all the best. Take care. Thank you.